All right, welcome back to another episode of the Orange Wheel podcast, the podcast where we go into the corporate Bitcoin space. We're keeping our episodes to 21 minutes. And my name is Johannes. I'm the co founder of Orange Wheel, and with me is Ted, founder and CEO. How are you doing, Ted?
Doing very well. Been in Canada for 2 weeks visiting family. We'll be flying back to Copenhagen tomorrow. So this lovely background we won't have in subsequent episodes. Yeah, doing very well. How about yourself, Johannes?
That's good. Yeah, I know we've both been on vacation for the last week, so it's great to be back. And I know, so one topic we have seen recently is, there's a lot of people that is talking about the whole Bitcoin corporate space is a bubble. I guess the thesis is that, companies like MicroStrategy is structured, they're deriving yields from new capital inflow and not from operational revenue. I think that might be the thesis that most people or the most skeptics have about this. Maybe you can touch more about this.
Yeah, I think it's really fascinating, and I think I understand where the skeptics are coming from. I think there's a lot of interesting parallels between what we're seeing with the Bitcoin treasury companies and the ICO craze, and these different bubbles we've seen in previous Bitcoin cycles. More and more dubious companies are tapping extraordinary large capital pools, coming with very lofty Bitcoin accumulation targets. Venati Coffee out of Spain, for example, is a company that just has like six cafes or something and a market cap of just a few million euros. And they have an ambition to raise tens of thousands of Bitcoin, as an example. And I think there's a few things at play here. I think one is that, well, I think the way I sort of try to draw this distinction in my head is I think when we talk about the monetary transition that's happening, we have nearly $250 billion of capital that's existing in the existing fiat system in a variety of different asset classes, but all underpinned by fiat and sovereign debt. And that capital is going to be migrating over the coming decades into the Bitcoin. And this creates two broad sets of opportunities for corporations in particular in this space. One is to basically be a facilitator of that migration. And that could be as simple as what Orange Wheel does, providing education, providing advisory services to those that own capital. It could also be the exchanges, the brokerages, and traditional financial institutions as they adopt more Bitcoin financial services themselves. The ETFs are another prime example. And then I would put companies like MicroStrategy, Metaplanet, SmarterWeb also into this category where I wouldn't really necessarily call them Bitcoin treasury companies. They are more ferries of capital. They're vehicles that allow the transmission of capital from the old system to the new system, accessing trapped capital pools that don't have access, or at least not in a tax efficient manner, given certain regulatory constraints or otherwise, to be able to get exposure to Bitcoin. So this is one broad set of opportunities, which again is the facilitation of that migration. And then the second category is just basically any company, regardless of what industry it's in, being able to adopt more of a Bitcoin standard mindset earlier than other companies. So applying Bitcoin as the hurdle rate within whatever business it's in, irrespective of being able to tap additional capital from the capital markets. So these two broad categories are not mutually exclusive. Companies can, of course, do both. We see some companies that are these pure play Bitcoin treasury companies. Again, I don't think it's a great label because I think any company can become a Bitcoin treasury company. Again, it's this kind of particular service of facilitating transmission and migration of capital from certain capital pools into Bitcoin exposure. So SmarterWeb, I think, is maybe a good example of also BTC AB out of Sweden. They're more or less explicitly just doing this one particular service. Metaplanet has one hotel left over, so they do have technically some operating business. MicroStrategy has its AI and BI business, so it's a little bit more of a hybrid. And I think it's important to draw this distinction because there could be, and I think there likely will be, an oversupply of companies trying to provide this one particular service. And there could be, the prices will get over exuberant, and there will probably be a crash that comes once people realize there's an oversupply in relation to the amount of demand for that type of service of providing that transition, especially given that I think this is something that will be kind of a winner takes most, where you only need a few companies within each capital market to be able to kind of do this. There are economies of scale, I believe, as well. So I think those convergence towards one or two per per major political jurisdiction. And then also that they do rely primarily, in my estimation, on some degree of regulatory arbitrage. Whether it be some sort of situation where, from a taxation perspective, it just doesn't make sense for these funds or capital pools to hold Bitcoin directly. Maybe it's a liquidity perspective. Maybe it's just simply certain laws or legal frameworks, or just investment policy restrictions. So as those decrease over time, as those barriers come down, that ability to play that arbitrage kind of goes away. Now, these companies will accumulate a huge amount of Bitcoin over that time period, and that will allow them to do some really cool stuff in the future. Potentially have additional Bitcoin services, or at least pay out a huge, healthy Bitcoin dividend to their shareholders, which would be quite attractive. So I think that it's important to know that if and when such a bubble collapse kind of happens, that we don't throw the baby out with the bathwater. And I can imagine people who aren't as deep into the Bitcoin space might get scared off by any sort of Bitcoin corporate adoption, simply because people are conflating this one particular service offering with corporate Bitcoin adoption more generally. So I think that's kind of my 2 cents on the matter at a very high level. Any reflections on that, Johannes, at this stage?
I think so. Right now, you're touching upon risk and sustainability. I think it would be interesting to try and figure out what kind of pullbacks or risk that could actually trigger these issues that we are talking about, right? So if the bubble bursts, could that be because of a bear market? Could that be because of regulatory changes? What else? I mean, I think that's the main two that I'm seeing right now. Do you have anything else that you're thinking could be like the actual thing that burst the bubble?
It's a interesting question. I mean, it could be a black swan event that we just don't really have in mind at this stage, where there is just a correlation of factors besides the Bitcoin price itself. I haven't done too much thinking. In my mind, I think it's just gonna be a classic situation where there's just an overexuberance, where people are chasing these things because they can get rich quickly, and at some point the market sort of turns and people realize the upside potential in these equities is beyond what can be realized. And it might just be some of the big companies might still weather the storm, of course, or I believe they will, of course, weather the storm, the MicroStrategies, the Metaplanets. But there could be a huge swath of the smaller firms that have gotten in over their skis, have taken on debt with relatively high cost of capital, in combination with the bear market and lower Bitcoin price, that kind of pushes them into kind of liquidity crises. I'll also say, I mean, I should have mentioned this one earlier, but I think there is also some other dynamic at play here, which might be the case that sort of is driving this bubble, which is that companies might be seeing this Bitcoin treasury play as a means by which to raise cheap capital for now. And I think we've seen that with GameStop, right? So GameStop, I think, announced the Bitcoin treasury play, raised a huge amount of capital, but then kind of didn't say they were going to be deploying it specifically for Bitcoin. I think they saw this as an opportunity to raise capital and then use it on other allocated to other investment opportunities for that business. And I think a lot of companies are seeing that as, this is that window of opportunity for them to raise cheap capital on this trend. So I think there's that dynamic at play as well, where people realize, okay, maybe this is just a cost of capital play more so than actually pursuing that specific strategy as well.
So, I mean, I think a good thing to also remember is that when we're talking about this, right? So it's kind of, there's this distinction here, because we have some people who truly understands Bitcoin and is, what you would call a Bitcoin maximalist, or just, general Bitcoiners. But then we also have, people from the traditional capital world or finance world that haven't really paid attention to Bitcoin yet, and haven't really understood it yet. So I guess it's way easier for those people to I'm looking for the right word here, but take other examples and then try and push Bitcoin into the same scenario, right?
Mm-hmm.
So I think it's a fun position to be in right now in the world, because what we really need is we need people to really study Bitcoin, because then I think most people would come past this, or get rid of this notion that, oh, there's so much stuff that could go on and there's so much stuff that could happen. And I mean, obviously, right, we're going to see a bear market eventually again. And it's going to be really interesting to see what's going to happen. But there's this saying, it's Bitcoin is going to go up forever. If you're a company now that can buy a lot of Bitcoin with cheap loans, then you're going to be way better off in 10, 20, 40 years.
I tend to agree with you. I think for any company that does pursue this strategy and doesn't take on excessive debt and sort of weathers the storm and just amasses Bitcoin, I can only imagine it helping their operating business and whatever industry they're in over the long term, if they're prudent in other means as well, right? And not really just only exclusively trying to ride the hype wave and trying to raise capital while it's cheap and then deploy it into more speculative investments. Then I think it's also interesting to discuss what types of companies I think are best suited for adopting a Bitcoin standard. And then again, irrespective of tapping capital markets, which they could do on top to buy Bitcoin, but using their operating business as an engine by which to buy Bitcoin and accumulate Bitcoin per share for the equity holders. Because I think that's going to be the key KPI that the capital market participants who have already moved to the future system, they're thinking in Bitcoin per share. And there's this massive arbitrage as capital market participants who are still in the old way of thinking are trying to get maybe yield and total shareholder return denominated in fiat, are willing to kind of get a competitive rate of return of, let's say, 8, 9, 10%. And those who have moved to the future realize that Bitcoin is the hurdle rate and what I want to be accumulating my exposure to. And I think that size of capital pool that is moving into the future is going to grow, and probably its growth is going to accelerate. But and that's part of that kind of capital migration we discussed. But that creates an amazing arbitrage opportunity that creates so many interesting opportunities. But if we look at companies that, just a specific operating business types, I think one that's really stands out is companies that are just cash cows that have low growth options. So they're generating cash, but they don't really have interesting growth opportunities. M&A deals are, rarely build value in most cases, and in particular mature industries, it's even less so. It's just a consolidation game and really marginal returns with a lot of risk of integration and so forth. So these cash cows that tend to be in more mature industries. And another one can be this mismatch temporally between those that are generating cash flow in the present from their operations, but have longer dated liabilities. This is another kind of set of companies that are particularly well suited to adopt a Bitcoin standard, so they can hold Bitcoin in the interim more than cover the growth of their liabilities and then accumulate additional Bitcoin per share for their shareholders. And then you have companies in the energy sector, which I think is also quite interesting, where they can integrate Bitcoin mining potentially as another means by which to accumulate Bitcoin for their shareholders. So those are kind of three categories of companies that I think are particularly where a Bitcoin standard adoption can be particularly relevant. And then, of course, you can layer on tapping the capital markets on top of that, issuing preferred stock, issuing convertible debt, similar to the kind of MicroStrategy playbook, which may or may not make sense for companies depending on their position.
Okay, let's try and roll it back. Okay, so let's say there's someone, in a C-level position in a company right now listening into this conversation. Would you try and explain to them why they should actually take Bitcoin serious and take a look at it? So, I mean, there's the scarcity part, and there's also, like, if you're looking at companies now like 21, right? I think they've just released, you could essentially see their holdings, right? So it's like fully transparent. So that's also an option, right? So I think there was a rule recently in the US that allowed for just easier for companies to share how much Bitcoin they have, essentially. So as a business leader, why should you take Bitcoin serious right now?
So I think there's two major signals that are becoming unignorable that I think you really need to kind of look at and take seriously. One is just simply the return of Bitcoin as denominated in any fiat currency, US dollars, euros, Chinese yuan, Japanese yen, doesn't matter. It is generating a return that is superseding any other major asset class of its size. Yes, in some years, in any one given year, it could be a negative return. There is that volatility. But if you zoom out over a 4-year period, we're looking at a CAGR of 50, 60, 65% per year. And the volatility is coming
60,
down, right?
I think it's 65 on average the last 10 years, right?
Yeah, and I think it might be even higher than that over a 10-year period. So anyhow, it's performing extraordinarily. I think that's a major signal that this is the the new hurdle rate, that um, this is a signal that capital, it will needs to flow from the old system into the new one, and that's the incentive given to do that. So I sort of see it almost as if you study physics and stuff, right, you kind of have these, like, the flow rate is a function of the difference in pressure. So I sort of see, like, the capital flow is a function of that difference in rate of return between the two systems. So I think that's one major signal. Just looking at that, and it's been 16 years now. It's not just a passing fad. This is not going away, and it's going to continue to kind of deliver these types of returns. And that's number one, right? The other one, I think, is more in the moment in time that we're seeing this. But again, I see this might be, again, a volatile thing depending on what the trends are. But the fact that like companies that announce some sort of Bitcoin play are able to finance a lot of capital from the markets at a very low cost of capital on average. And I think that's what a signal is there's a thirst from the capital markets to get exposure here. There's that kind of, like, latent built up capital that needs to kind of flow. And when these new channels open up, lots of capital kind of flows in, right? So it's this kind of pent up source of capital that is waiting for new conduits to kind of flow through. So I think that's another major signal that capital markets participants, business leaders, CEOs, CFOs need to kind of say. It's like, and a lot of companies are struggling with the high cost of capital, especially now with interest. We were so used to zero interest rate policy for a long period of time, negative interest rates in Europe for a number of years. Now we're moving into a higher interest rate environment because governments need to try to protect their currencies a little bit from hyperinflating. And a lot of companies are struggling in this higher interest rate environment. Also, especially in Denmark, these renewable power infrastructure plays were almost fully dependent on super low interest rates to kind of generate their capital to invest. And now they're really struggling. So if there are these companies that can go and just by almost making a simple announcement that they want to do Bitcoin, and now our capital is just flowing in super cheap, you can't ignore that, right? I think it would be stupid to just be foolish to say we're just going to completely ignore this signal from the market when we're talking about hundreds of millions, in some cases billions, in some cases tens of billions of dollars per transaction, per capital raise, just flowing into the system. So for CFOs, I mean, these are challenges that you guys are typically facing in many industries, and the answer is there. The answer is out there. You just need to learn about it, embrace it, understand why it's not just a moment of time, why this is a one-way street and a ongoing macroeconomic fundamental transition, and to benefit from that in a way that puts you ahead of your competitors in your industry. That's I think the message I would try to communicate to CFOs and CEOs everywhere.
I wanted to just share this really quick, this image from Jesse, because this touches really well upon what you're talking about right now.
Mm-hmm.
We can see this is the last 3 years of capital inflow, where you can kind of see it's been sucked out of, the old system into harder assets like gold or Bitcoin. You can see this, right?
Yep.
Yeah. All right. Sorry. Continue.
Yeah, no, it's great. I think it's good you shared that because I think I have a slide that kind of builds on that a little bit. If we go over 1 or 2 minutes here, let me just share my screen.
Oh yeah, we just reached the 21 minutes really quick.
Okay.
So we just
Yeah.
went past the 21 minutes, but let's give it some more time.
Yeah, so I think this is similar to what you showed earlier, Johannes, where we have Bitcoin at 2 trillion roughly market cap of nearly 900 trillion in global wealth today. And if we assume, and I think this is debatable, how much of that capital will flow into Bitcoin, but if we assume for now that all capital will flow in, and I think there's a reason to believe that. I think all major assets will be on chain, and I guess the question is, will some of these things be on another chain? Maybe it's debatable, with real world assets and stuff being on ETH and other layer ones. Maybe that's the case. But if we assume now that a substantial portion, if not all of that global wealth will move into Bitcoin, this is the huge amount of like pressure that's kind of built up that needs to flow into a hard asset that will not grow. So it'll just become more and more powerful and valuable as that huge amount of capital moves into it. Um, so I think that's the image I just wanted to kind of build on, based on what you shared earlier.
Yeah. So about that, I think most of that stuff will just be implemented into Bitcoin layer twos. Hopefully not Ethereum. I mean, if you, it's funny if you look at the price of Ethereum measured in Bitcoin and not dollars, it's is even worse. It's kind of hilarious.
That'll be
Okay.
a
Anyways,
discussion for our
Ted.
next episode. We can discuss like Bitmine and their Ethereum treasury and what we think about that. I think that'll be an interesting topic to discuss next time.
Yeah, sure. Okay, we went over time, so let's end it here. Great chatting with you, and I'll see you another time.
Yep. See you in Copenhagen next week. Take care.